Hey everybody, it is June and we are talking real estate in the lower Hudson Valley and what's going on with the market. So the biggest thing right now, we still have low inventory. Mortgage rates are starting to come up a little bit. They're probably right now between that 6.5 and 6.75. Still really good overall, just a little bit higher than what we saw about a month and a half ago. So we're seeing that spread between the 10-year Treasury and the interest rates right now about 300 basis points, where the average is about 170 basis points. So, as the market continues to evolve, it's something that we want to watch. And, this past week, the federal government, the Fed, has decided not to raise the Fed funds rate for this meeting. They have indicated that they may raise another couple of times before the end of the year if they can't get inflation under control. So as we're going through stuff, we look at where is the market, what's inventory, what's demand. Demand is still strong, inventory is still low. It's always a supply and demand game. George Ratu, chief economist over at KCM, the only times that spread approached or exceeded 300 basis points were during periods of high inflation or economic volatility, like those seen in the early 1980s or the great financial crisis of 2008 and 2009. So we're hoping that as things kind of stabilize a little bit more in the markets like we saw kind of early on in the beginning of the year, that those rates will drop. That spread will drop from 300 basis points to 200, 2.25, something like that. And we're seeing that 6% interest rate. But overall in our area, the demand is still strong. I know in a lot of other parts of the country, we are still seeing some people kind of like, hey, we're priced out of this market. We're not doing it. And we're definitely seeing that here as well, but not on the scale. We're still seeing there's still enough buyers out there for the supply. So, if you're looking to buy a home, you think about what are the advantages of owning a home. Number one, you're building equity. Number two, control over your expenses. You know what your 30-year fixed payment is going to be. Taxes are going to fluctuate, and the cost of maintaining the home is more expensive today than it was 5 years ago, but your monthly payment generally is going to stay the same. Long-term saving plan. A lot of people's homes is their forced savings plan. You think about it, after 20, 30 years, even if your house didn't increase in value, if you paid $500 today and it stayed in value in 30 years, you paid off your mortgage, now you have $500,000 in equity. Building wealth, 100% generational wealth, helps you build strong credit history. It opens up the doors a lot for you. So if you're on the fence, but you know that you can do it if it's the right time in life for you to buy a home, I definitely think it's a great investment. Obviously, for about 20 years now, I've been selling real estate, and I see that as solid stuff there. So you also have some of the big tax benefits of home ownership. You have mortgage interest rate deduction, okay? You're able to deduct your property taxes in New York State up to that $10,000, but there's a couple things that they're moving around, the PTE tax and different things that they're doing. And, imputed rent. So your rent goes up, but your 30-year fixed mortgage payment stays the same. And then one day when you go to sell the property, hopefully there's a profit from it, which most of the time there is. So when we look at, consumer confidence, why are people buying? You buy because you have births, you buy because you have deaths, divorce, marriages. You're seeing that still the life cycles are there, that people are still moving, and that's where we're seeing a lot of renters buying, first-time home buyers in our area. That could be $500,000, that could be $1 million. It just depends on the property. Multifamilies are still going pretty strong out there. So when we look at consumer confidence and house prices, right now, as things has kind of continued through, obviously in 2010, right after the Great Recession, it was about 18%. Where in 2022, it was about 37%. And I think we're still kind of continuing along that trend of consumer confidence in stuff. So when we look at, where are prices? Back over the summer months, probably beginning of this year, a lot of people are like, oh my God, prices are going to fall. And the reality of it is that we saw a peak in June 2022 when those rates went to 6%. Then we saw probably a little bit of a downturn and then kind of that dribble. And then March came when the SVB bank collapse happened, and a couple of the other small banks, and then we saw interest rates actually go down a little bit to a little bit under 5, and we saw prices starting to increase. We had the spring market, supply and demand. So if you look at one of the charts that we have attached, you'll see that kind of dip, and then you're starting to see that upward trend. And I think as the year continues, you're going to see that. I don't think you're going to see this, but you can see that a little bit going up, and that's kind of what we've seen here locally that you have seen on a national average. So, as we're coming through, we talk about, compared to last year, compared to 2 years ago. it's really hard to see when we are comparing against to 21 and 22 because there were such weird years with the very, very low interest rates coming out the pandemic, all of that good stuff. But if we look at home price appreciation, what 2022 was 5%. If we look at 2018, it was 5%. 2019, it was 4%. So if we take out the craziness of 2020 and 2021 of 11 and 18% nationally, we're back on track. We are seeing price appreciation. So don't let the news scare you. We are still in a very stable, healthy market. You know, when we look at pending listings, things that are still selling, we are just about on par from 2017 to 2023, minus that 21 and 22 years out there for pending home sales. So once again, you see that stable market. You are seeing some price increases. Homes that are in good shape are still going, you know, at a good premium over, you know, appraised value. When you look at pricing, you look at a market value and appraised value. And one of the things that we look at is how do we get the home's value up? How do we get that market value up? You know, prepping the home, staging the home, getting it ready, our photography, our marketing, everything like that to kind of help, you know, get us over that appraised value. And we're seeing that today. So far, we haven't really seen an issue of appraisals not coming in on a grand scale. Sometimes, yes, but not on a grand scale. So, you know, overall, as we're heading to the end of June, we have stabilization. We have still strong demand. Supply is coming on a little bit more right now. Not dramatically, but a little bit more with that late spring kind of coming in. People saying, okay, you know, the market's not dying. We still get good money for our house. Let's put our house on the market and make a move. So we're seeing that stuff kind of come together. So if you have any questions, want to get an idea whether it's the right time for you to buy, whether it's the right time for you to sell, feel free to reach out. Happy to chat.